Welcome back to Small Caps. And what day is it? It is Truth Bomb Tony week. Well, indeed it is. And as always, he'll be dropping some truth bombs this week. Let me tell you, lots going on in the market. Tony Locantro from Alto Capital. Lots happening at the moment. And some of the things that you said last time we chatted have come true. You told our listeners, be careful, be cautious in uranium, because you said it's gone for a big run and it might have a bit of a pullback. Tick. It did. Now, that's not to say that there isn't value in uranium stocks and that they won't have another run, but I think what you were saying was whenever anything goes for a big run, just be aware that things can also come back a little bit.
Yeah, I actually copped a bit of flack in the comments, and I copped a bit of flack in the comments for my attitude, and I can understand that I might come across as condescending, but there's no friends when it comes to money. No one cares. And if you don't tell people how it is, they're just going to keep stuffing up. And I have to sometimes my clients would want to punch me in the nose if they could get near me, because most of them are over east. But as I keep saying, no one cares about you and your money. You've got to look after yourself. But these uranium stocks got so far ahead of themselves, it wasn't funny. And they've corrected to the tune of 25 to 40%. The spot price has come off just over $50. That was only a couple of weeks ago. Now to just below 44. But the uranium price can continue to inch higher, but these stocks are going to be volatile.
Yeah.
And I put clients into EL8, 8 to 9 cents, and the stock went over 70. And a few wouldn't sell. Some said, hey, I've made 9 times my money, let's take it. But the psychological impact of not selling at the top means that they expect to get that price back, and that capital goes to sleep. And it's hard to sell a stock on the way down. As they say, when the ducks are quacking, you've got to feed them. And some of these market caps just got so far ahead of themselves for companies that aren't going to produce a pound of uranium. So for sure, trade the bandwagon, trade the hype. The Sprott fund attracted a lot of hype, and then suddenly the market gets some wobbles and no one wants to know about it. So that's why I'm cautious about trading the stocks, rather than, I think the uranium price will continue to edge higher after the odd correction. But geez, you can do your nuts on the stocks. So that was my warning.
Yeah, and it was a good warning. And I think it's a timely warning. And it's not just uranium, it's anything that goes for a big run. Unless, I guess, Tony, maybe I'm wrong here, but unless you're going to be sticking in it for a long term, or if it's a producer, like if you had some stock in BHP and BHP has a bit of a pullback, it doesn't mean that you're going to dump all your BHP stock, because long term, it has good, strong fundamentals. It pays a dividend. That's a different scenario to the small caps sector.
It was funny. I actually remember that day, that video, that slide, I think it was in Brazil, was happening. People watching the slide, and then the mudslide, and then BHP then got poleaxed down to about $14. So during those times, during the GFC, there was plenty of buying opportunities as well. But now what I've noticed is order envy is rife, and people are, as I say, cutting off their roses and they're watering their weeds.
But what do you mean by order envy?
Well, others are apparently making money, or lying that they are making all this money. And some of my clients in high quality stocks are getting bored and want to sell to buy absolute rubbish. And then they realize that there's no such thing as a quick buck. So I've been advising clients in spec stocks now for 23 years. And I've seen this every friggin' time. They will sell quality, buy crap, then sell more quality to cover the losses. But the best trading tool at times is your backside, and anything with strong fundamentals always delivers through every market cycle. And you'll go back to some of these stocks in 2 years and say, wow, I could have bought it at that price. So it's tough. everyone wants the dopamine hit. They want that rush, like instead of doing cocaine off a table, there are better ways to get that rush. And that's unfortunately the most.
We are not condoning drug use here, ladies and gentlemen. Let me just tell you. But
accidentally uploaded clips of so-called professionals doing white powder. I think it's, there are ways to get you hit. And what I've seen is that once you are addicted to rubbish stocks, it's near impossible to turn that around. You cannot wait for a packet of 2-minute noodles to finish, even though they normally take 5 to 6. It's all about the psychology. If you have the right psychology, you can hold quality juniors where their growth path is staring you in the face and you have so many doubts about it. And that's where the big dollars are made. That's where the 10 baggers, and that's where people go from 50, 100,000 into the $1 million level over time.
Look, Tony, I get what you're saying. What I want to do right now, though, is I want to look big picture for a moment, because there's a lot of, I guess, it's not just volatility, but there's a lot of things happening in the market. There's a lot of uncertainty. There's a lot of talk about there's going to be a bit of a slip, that we've been a little bit in the red over the past few days. Do you think that right now we're coming close to that press? Because you've been saying for a while on a number of fronts, you've been saying that you feel that not only is there malaise in the market, but the market might be overheated. We'll talk about the property market as well. You still think that's overheated. And what I've been saying is, no, if they keep printing the funny money over and over and over again, it's not the value, but the price goes up. Don't you think on a macro level that with all this money printing globally, that the stock market will keep going up, whether it's small caps or the others, and the property market's called, that's just what's going to happen because they keep printing? Love your view.
I disagree totally. I think we're absolutely rooted. And I will explain that all the good news about easing of lockdowns is largely factored into the market, where earnings are going to have to keep up. I think that the banking sector has enjoyed a great recovery, but a lot of our stocks are simply overpriced, and it has run up on the expectation, hey, the economy will open up, retail sales off a cliff. I just think once the economy opens up, we're going to see the market might have a little burst from time to time, but I think there's nothing really to keep the market going. I think the major indices are due for a nasty correction. The US indices are overpriced. It's a bubble. And I look back only recently, the iron ore price halved in no time. And that's how sentiment can change. And what Australia, like, we're a consumer-driven society because we go out and buy crap we don't need to impress people we don't like or don't want anything to do with. But in saying that, I went to the bank to rejig my home loan, and you turned the screen towards me and said, you've got a $50,000 buffer, you can withdraw. And what Australians have stupidly done is withdraw on their buffer off a wildly overpriced property. Now, what I'm seeing is... Hang on a second,
Tony. Stop. What do you mean a $50,000 buffer that you didn't know about? I don't understand that at all.
That's my capacity to withdraw against my home loan. So obviously I pay a little bit more. They adjust the value of my mansion, which isn't a mansion, by the way. I live in a 1-bedroom unit. But so suddenly I've got this massive buffer to withdraw. And in the AFR, they focused on that, where Australians are going out and buying depreciating assets with this imaginary buffer. And I just think it's an absolute house of cards. And the rallies can go on longer than what you think, because it's an abnormal market, because due to restrictions, there's been less property demand, FOMO, but you look at the costs of getting into these trades. You've got stamp duty and all the costs.
Yep.
I think the wealth effect can wear off pretty bloody quickly. And I thought the market peaked at 12 times price to income. Sydney has just gone 14 times,
Wow.
where the long-term average is 4 to 5 times your income to own a house. So house prices in Sydney continue to trade at Japanese.
But if everybody's going up and everybody's having a party,
it's a fugazi, as they sell Wolf of Wall Street. It's all going to end, and it's going to end pretty bloody quick. It's the dumbest global bubble in property I've ever seen. This is, I mean, aliens will be laughing at us. Economic students in 100 years will be pissing themselves at how stupid we are, paying 14 times our earnings for a friggin' house when it's normally a third of that. Anyway, go figure. I just think that these rallies are unsustainable. Every bubble has burst. You just can't have this stupidity going on. And we've now got all the APRA and even the banks are saying that we need to put curbs on the lending. But once the fuel runs out, there's nothing to keep the fire going. So Australians should be careful. It's, you know, once someone loses their job, there's not enough income to support these mortgage payments. And heaven help people once interest rates go back to 6%. Because
they're not going to do that for a long time, Tony. No government can afford the interest rates to go up to 6% because they can't. The only tool they've got left in their toolbox is to inflate the debt away and keep the interest rates low. They're not going to put the interest rates up for a long.
Well, if you look at, we can talk about the RBA cash rate, but mortgage repayments are going to go to 6%.
Go on.
Within the period, you know, you go out and take out a 30-year loan. To buy $1 million house that's worth 600,000, and then suddenly you're paying 6% interest. Look, interest rates will start to rise because the only decent tool against inflation is monetary policy and lifting rates. So at the moment, rates are 0.1, right?
Yep.
On a mortgage, you can get 1.86 fixed for a couple of years, but you're still paying over 2. So what happens when they start to lift this cash rate? You'll see mortgage rates go up, and a lot of families that have been duped into buying houses in this stupidity are going to be in trouble. Interest rates are going to rise, and even though the RBA said, look, nothing to 2024, geez, they're going to have to lift before then. Otherwise, we're going to have runaway stagflation.
Well, that's and I think that could be something that we've got to look at as well. But stagflation could be the ugly genie coming out of the bottle as well. It could be not just inflation. You could be looking at stagflation. You know. Yeah,
an inflationary recession, as I keep saying, the economic equivalent of being sandpapered to death. And the last time we really had that, I think, was during the 70s.
70s, yep.
The 70s, where we had to line up to buy petrol, and you had odds and evens days, and you know, you could buy a house for 3 times what you earned, and you could live where you wanted in Sydney. Geez, this is unsustainable. And what you've seen in the iron ore price, in the price of uranium stocks, in the price of any stocks, once the heat comes out, the corrections, they're brutal, and it doesn't take much to change sentiment. So I think looking at the economy, hey, it's been great if you've been able to sell your used car. If you invested in a brand new RAV4, you could have made 50% profit. It's just an abnormal time that no one saw this COVID coming. No one saw the restrictions, the lockdowns. I mean, you know, I was fortunate. I actually managed to get to the AFL Grand Final.
Oh, lucky you.
Yeah, what a night that was. And
did the right team win though, Tony?
Oh, actually, it was good because I went to watch the game and I was totally impartial, but I did have a soft spot for Melbourne, and I think Perth ran the perfect event. Oh, goosebumps.
Oh, of course they ran the perfect event. Of course they did. Hey, listen, mate.
Yeah.
We don't have lots of time tonight, so I really want to ask you this.
Yeah.
You're talking about things going, you know, being a little bit of what I would say, you know, off the boil, property, etc. But let's talk about some specific commodities that I think our listeners might be interested in. Copper. There ain't enough copper. There's not enough supply at the moment. You only have to look at what's going on in terms of, you know, you're not going to go away from the fact that governments around the world are looking for that clean, lean revolution. So they need more copper for the EV revolution. Do you think copper is stronger for longer, and therefore that's a good sector for our investors that are listening to be looking at certain stocks in that sector?
I think stronger for longer and lower for longer are dangerous phrases.
Oh, whoops.
They're just as dangerous as I do or I love you. Look, copper, you have to go 4,000 metres above sea level. A lot of the copper is now under 1%. So there will be discoveries. Copper will be volatile. It doesn't mean this commodity is going to straight line at all. You will have strikes, in Chile, and you will see disruptions to supply, which will spike the price. But I think, whilst you can't discount another commodities bubble, I think the way the world's heading, there's certainly a lot of risk to the downside. And I just think you need to focus on the individual companies. So, yeah, copper, fine. They're running great advertising campaigns. Same with nickel. There's now talk about zinc batteries becoming more popular, so that might boost the zinc price. Lead is as popular as a pimple on prom night, but the world still needs lead and tin. So
look at the tin price, Tony. The tin price has gone ballistic.
Yeah, it's extremely illiquid. It's hard. People struggle to get a grasp on it. But if you look at some of the tin stocks on the ASX, they hardly move. So all these tin spikes, speculators just can't get excited about it. Mind you, they got excited about coal and iron ore.
Well, what's going on with it? Yeah, well, iron ore goes, see you later. The oil and gas sector and the coal sector is very strong at the moment.
Well, it wasn't that long ago that oil was trading in scary fashion. I mean, how low did it go? And everyone says, well, the EV revolution is going to kill the oil price. Well, no, it didn't happen. So, and Kodak going digital didn't spell the end of silver. So I just think sometimes you've got to steer clear of these fairy tales and focus on your own finances and buying individual companies that have strong fundamentals at the right bloody price.
Let's just quickly talk, if we could, because everybody knows I'm a gold nerd, love my gold. Gold's just been a little bit, how's your father? But normally when in times of uncertainty and a little bit of volatility, gold seems to come to the fore. What do you think's going on at the moment? Have you been watching the gold market? Do you like the small caps sector of the gold market? And also some of the producers, because I'm looking at it and thinking, as a contrarian investor, I'm looking at some of these stocks like the Northern Stars and the Evolution who are producing, and their costs are ridiculously good when you look at what their cash amounts they're throwing off are. What's your view on the gold sector at the moment?
I think it's offering out, outstanding value. Northern Star has pretty much halved off its highs. Evolution and Regis and Ramilius have all come off by frightening amounts, whereas the Australian dollar gold price hasn't done much. No. So I think it's all about sentiment. It's all about the institutional money flow. But I think rather than looking at banks or finance stocks, the next yield plays could well become the gold producers, because these things spits cash. There are a number of juniors, I think, that have massive futures that I can just sit there for clients and pick these things off, because the growth profiles to me are blindingly obvious, and all you need to do is be patient. And we're always close to a major gold discovery. So, De Grey did it. Look how that stock went. But that stock now is friendless after putting, a massive resource. But it just goes to show you need to play the individual story. And that's why I've been buying the absolute crap out of Mako Gold and Uranium, because one's an emerging resource story. The other one is building and has fantastic management that worked along with Bill Beeman. So to me, they are the best gold growth stories on the market. And sure, they're not moving at the moment because speculators are chasing the fast-moving rubbish.
Yeah. Yeah, and no one's, and you know, you've said it before, I've said it before, and let's throw it in there. Rick Rule said it before. When everyone's looking this way, no one's looking at, for example, the gold price, you know, the gold stocks at the moment, because it's just a bit on the nose. That, ladies and gentlemen, is when you can make very good returns. But you've also got to be careful. And Tony, you just mentioned two companies. I know them both, Uranium and Mako. Both those companies have got management in there that know what they're doing. They're not fly-by-nighters that have come in and said, oh, we're just going to pick up a bit of dirt and see what we can do with it. They've done it before. They'll do it again.
Yeah, I think you only have to pull up a chart of West African WAF, have a look at how that tiptoed through the tulips, you know, 5, 6 cents and well over, you know, over $1 at one point.
Yeah.
It's funny how these stocks get no interest and suddenly people say, hey, wait a minute, that was obvious. And if these companies don't find it, they're in line to acquire it because the good projects seem to get sold to the good people. And you look at what Jake Klein's done at Evolution, buying these mines. Bill Beament started with one mine and bought some others off the majors. So, but they're not going to sell it to a charlatan.
Yeah, and I saw Navarre today bought one of Evolution's assets, and Evolution are going to become a not substantial, but a decent size shareholder within Navarre. So there's a lot of moving and channeling around in the gold market at the moment.
Yeah, I think it's always going to be a great sector. And as I've mentioned on this program, when I was writing about gold about 19 years ago, the price was $251 an ounce, and gold companies were still able to make money.
And here we are today. It's at approximately 2,500 Aussie. And some of the companies out there, like Tieto Minerals, they've just come back with I think it was their BFS saying that, you know, their all-in sustaining cost is less than 1,000 at 870 or something. You know, crazy, wonderful. When you look at those numbers, and I like gold because you can do it off the back of an envelope. The last word goes to you, young truth bomb Tony. We've run out of time. What would you suggest in this week that investors need to do to make sure that they protect but also grow their wealth?
Just remain patient and don't worry. Just don't worry about what everyone else is doing, and that goes all the way from buying houses, home renovations, buying a European SUV, or buying a stock that's just about to correct 50%. So stick to the quality, don't chase the rubbish, and stay humble.
And Tony and I'm going to have a chat with Tony because on November the 18th, we are doing our final virtual gold conference for the year. You can go to goldevents.com.au and register for that. But I'm going to have a word with Tony because clearly he likes a couple of gold stocks. So we'll have a word with him and see who we can get onto the program. So that's November the 18th. Go to goldevents.com.au. Tony, I'll see you in a fortnight. Thank you so much for joining me today on Small Caps.
Always a pleasure, Kerry.